All right, it's Ron Toy with the Ron Toy team at Cross Country Mortgage doing my Monday mortgage market update live for you all. As you know, I try to upload these up to my YouTube channel, so if you don't make it to the beginning, don't worry, I will go ahead and upload them. I have a backlog of a few that I still need to upload, but I'll get to it. So where are we at today with the mortgage market? A lot of crazy stuff happening over the last few days. No worries. The market's down 12 basis points, not much, but we had a huge recovery last week because inflation has come down. We were actually negative last month in inflation, which is fantastic. We haven't seen that in years. And so right now at the bond market price, which I talk to you about every week, that's 101.03 on the UMBS 30-year 6% coupon. That's important so you know what questions to ask when you're shopping for the best rate. You want to ask the mortgage loan officer, what is the bond market price that this rate is attached to, and what coupon is this trading on? And that's so that when you call Joe Schmo 123 Mortgage at 9 in the morning and you call me at 10 in the morning, you're comparing apples to apples, because then I can show you. And I'll take the phone down and put it on the screen so you can see what I'm talking about as a visual representation. It's just important for me to go ahead and make sure that you're informed consumers and you know the questions to ask. If you have questions, thank you everybody who's joining. Go ahead and put them in the comments section. I'm a local licensed residential mortgage loan officer here in Dallas, Texas, answering questions about the mortgage market and anything else that people want to ask about in the comment sections, because most people, or a lot of people, never take the time to interact or communicate with a loan officer. So they don't know what questions that are going to be asked when the buying process happens, what to expect, why underwriters are asking for certain things, and I'm here to help reduce some of that anxiety and help encourage you to make a buying decision, whether you use me or not. This is more for education than anything. So if you're a realtor on here, this is a great opportunity to hear some information to share with your clients if you're looking for reasons to call, because on Mondays, we should be calling our clients. Same thing with lenders. This is good topics to mention with them. So I'm also going to go over the economic calendar that's for this week, important dates that are going to potentially move the markets. This is important. Again, reasons to call. Also for clients out there who are looking to purchase or refinance, you want to make sure you're paying attention to this information as well, so you're an informed consumer. Great website to know, bls.gov. That's Bureau of Labor and Statistics. You can go there. You're going to want to make sure to download the PDF for the recent PPI, Producer Price Index Report, and CPI, Consumer Price Index Report, so you can track what industries are impacting our economy the most and in causing the inflation concerns that we have. But inflation's coming down. That's one of the reasons why we've had a massive recovery. Let me just show you. Sorry it's janky that I got to take my phone down, switch the camera, but it is what it is. Let me just show you. Okay, so like I was saying, the questions you want to ask: what is the bond market price, this number, that the rate is attached to, that the rate is associated with, and what coupon is it trading on? UMBS 30-year 6%. These are the questions you're going to ask the loan officer when you're getting a rate quote. They don't know this information, that is suspect. But as you can see, this is how much the bond market has rebounded over the last few days. We're all the way up here. The higher this, the lower the rates. The lower this is, the higher the rates. So you can see we've had a good recovery since the last PPI report showed inflation is down. And so as you can see, this is stuff I track like a hawk. If you're a loan officer and you're wondering, should I subscribe to MBS Highway? Absolutely. Economic calendar, this is the important thing that we got to watch for events. Today was relatively quiet. Tomorrow, we've got some import price index. This is good. Retail sales, important information. But on Wednesday, with the building permits, this is going to give us an idea how the inventory concerns are going to be. Because right now, why prices are so high is inventory. We have a horrible low amount of property that's available for purchase. And we can see how much more property is coming to the market by the permits that are filed and also by the housing starts. We want to see the single family units that are being built, not just the multifamily. So these two things can be very much an impact on the markets. 20-year bond auction could be as well. Thursday, we've got initial jobless claims, could always move the market depending on how the jobless claims goes, the continuing jobless claims, and existing home sales. So this stuff, the change in that report. So these things could definitely impact the market. Friday, nothing. So be on the lookout. I'll keep you posted. Make sure that you are taken care of on the economic reports and how the market moves. I want to make sure that you're getting this information. Again, if you have questions, put it in the comments section below. Happy to answer it. Again, in case you're just now joining, I'm a licensed residential mortgage loan officer here in Texas. I focus on Texas. It's the only place I'm licensed. If you're buying or refinancing in another state, no worries. Let me know and I can connect you with a great loan officer there. The more important thing is answering your questions, being here to add value, and making sure you are an informed consumer and in a process of making that investment decision, because 2/3 of the wealth we have in our country is tied to the equity in homes. And right now, over 41% of homes are owned free and clear. So there's a ton of equity in the properties that are across the country. Why that is going to be a situation is if rates were lower right now, those people who have their homes that have appreciated over 50% over the last few years are sitting on a ton of equity in cash. So when those rates come back to a favorable place where they want to sell, now they're going to be competing for the same property with a ton of cash, like we saw in 2020, 2021, where people are bidding 50, 70, 100,000 over list. So while it sucks that the rates are a little higher right now, they're in the sixes. It's actually can be looked at almost as a blessing because seller concessions, seller paid title, sellers giving discounts to help cover rate buy downs will all go away once that happens, because every 1 point drop in rate brings another 2 to 3 million buyers back to the market. So buy what you can comfortably afford. Don't stretch it trying to impress a neighbor that doesn't really care and doesn't pay your bills. Comfortable afford and go from there. But yeah, the market is doing much better. It's volatile. It's going to be like this. I showed you the charts. So you don't want to wait to buy by timing the market, trying to save an eighth or a quarter in rate, because think of it this way. Say a point in rate means a $200 a month difference in payment, right? That's a significant amount for a lot of people. $200 a month times 12 is $2,400 for the year, right? But appreciation last year, with the highest rates we've seen since the 80s, home prices still appreciated between 5 and 7% on average across the country. So on a $300,000 home, if it appreciated 5%, you're looking at $15,000 an increase in price. So would you rather save $2,400 or make $15,000? And so that's where you got to buy what you can comfortably afford and see it as an investment opportunity. So if you're paying rent, you're paying a mortgage, it's just not your own. And I want to see you building your net worth instead of somebody else's, especially with the concerted effort by huge hedge fund companies and these mega corporations buying up the housing inventory across the country. I want to make sure regular people are buying homes and securing their future while it's still available. So again, if you have questions, put it in the comments. I'll answer them as best as I can, or schedule a time to meet with me. You can click on the link in my bio to go to my Calendly and schedule a consultation. It's free. Talk to me. Ask any questions you have. I'm happy to answer them. Like I said, I want to empower you to make a buying or refinancing decision that makes sense for your budget. Because especially once rates start coming down a little bit, you're going to get inundated with offers to refinance. And if they're not giving you good confirmation and good information on, is it the time to refinance? How long do you plan to be in the home? You're going to end up paying extra fees that you might not have to, just because some sales guy was able to slap the hood of your car and tell you how much APR they can fit in the thing. So that's not how I operate. I want to make sure you're taken care of. Again, if you have any questions, put them in the comments. Thank you to everyone who's joining. I'm technologically about a 4 or 5 year old savvy wise, so forgive me if this is fumbly. I do this to educate. I'm not a influencer in whatsoever any way. I'm just a loan officer who's tired of seeing people get jacked up by false information online. So happy to answer any questions. Thank you to everybody who's joined, and don't feel pressure to do stupid stuff like or any of that stuff. Ask questions, let's engage and have conversation. I don't need any of the other stuff. But yeah, thank you everyone who's joining. If you are just joining, I'm a licensed residential mortgage loan officer. So I help people get the financing they need to invest in property for single family up to 25 units. If you want to build, I can help you. If you want to invest in an apartment community, I can help you. Let's talk. But let's go. Loan officer, how does one become one of those? Texas here. Great question. There's a couple different steps. If you want to just go right into loan officer, it might be a little bit of a challenge just because there's a lot of information you need to know. But the great news is there's classes you can take online. CAPE School, it's out of Florida, but you can do it online. You need to get licensed to be a loan officer. So you go through their course. It's a couple $100. There's an exam prep course included in the packet. You go through that. Then you got to go down and take your fingerprints, the FBI background check, all that stuff. And there's a licensing process. And then once you are licensed, typically during that process, you can start interviewing companies and let them know you're in the process of being licensed and go from there. If you're brand new license and you have no experience, most of the time you're going to get put into some type of shop. But main difference in a loan officer and underwriter. That is another great question. So a loan officer, in essence, is the person that's building relationships with realtors, financial planners, and the community to bring in a person who applies and and we put together a package based on the guidelines for a person to get approved for a property. That's the pre-approval process in a sense. Then they go find a property. So what we're doing is we're packaging up the information to deliver to an underwriter to then confirm that we got every document and condition necessary according to the guidelines of the product we select so that we can have a sellable loan to that investor. So the underwriter double checks all the guidelines, all the paperwork, the file, everything so that it's in compliance and deliverable to the investor. So the loan officer, we get the client, we get the documents, we get the contract, we do all that, and then deliver that part to the underwriter. So almost like, think of it like a lawyer getting the information, presenting a case to a judge. Underwriter is the judge. They're the one making sure that everything is up on up and go from there. I personally like the sales aspect of it in that you get to educate, and it's not like trying to sell a car. This is a long-term real relationship, and most lenders want to be your lender for life. So it's a little bit different in the approach. Most of the time, you're not talking to an underwriter on the phone. You're not having any relationship as a client. With a client, you have your relationship with your loan officer. And so that's really the main differences between the two. But if you like helping people, build long-term generational wealth, home ownership is the key. And so I highly encourage you to look into it. You can message me privately and I would be happy to send you links to make sure you get it. There's plenty of business to go around. And the more people that are licensed that can give great information to people and help them make a buying decision, especially with the down payment and closing cost programs that are in Texas, where you can get up to 5% to help cover it with Seth and T-Shack. I'm not going to gatekeep this information. People can Google it. It's amazing. And I want people to be able to buy. So if you need any help getting licensed, I'm here to help connect you, send you links, bounce questions off me if you want, whatever. I'm just here to help. Anybody else who has questions, feel free to put it in the comments. I'm glad to answer them. And again, Ron Toy with the Ron Toy team at Cross Country Mortgage. I'm a licensed residential mortgage loan officer here in Texas, and I bring content and information to help educate people who are in the buying process or refinance process, lenders and realtors, know how to communicate to their clients to help them feel confident in their decision to either buy or refinance. This is a great time. It's the lowest prices homes are going to be in forever. And if you go on my pinned information and through my page, you'll see I've shown the home price appreciation data since 1942, the interest rate data since the 40s. Like, I want to make sure you see it from all angles and you're not just hearing it from some guy. This is data that you can also track on the BLS, Bureau of Labor and Statistics, bls.gov. I want you to know where the information is coming from. So if you email me, I'll also forward you any of the reports you want to see so that you can have it as well. But yeah, anybody who wants to be a loan officer, also realtors. A lot of people are afraid because of the changes in the industry after the NAR settlement. But if I was considering being a realtor, this is when I'd want to get in, because a lot of realtors are getting out. So this is a time where you can learn, build your systems right so that you can handle the influx, because once rates drop, people are going to need to sell their house and they're going to want to sell their house. And if there's a ton of realtors that went off because the things got a little bit tight, because most people's production is down about 60% this year or year over year, and a lot of people left. Well, that leaves a big, huge vacuum for the people who have stayed and toughed through it, because this stuff happens all the time. We saw a unique scenario with the rates that went up, but go back and look at data from like 2015, 2016, 2020. There's ups and downs in the market. But home prices are pretty stable. And since 1942, there's only been 6 times in our nation's history where home prices went down. 5 of them were during the housing market crash in 2007 and 8 through 2011. That will never happen again, because back then, if you could fog a mirror, you could get a loan. There were stated income loans, balloon mortgages, just absolutely horrible lending guidelines that exposed our country to some massive, massive issues. It was all fueled by greed. So Those guidelines have been changed. There are no more like loan programs like that, and it's a different world. Plus, if you look at the stuff I pinned before, you'll see the birthing rates and data that shows that they overbuilt. They built the most homes in history in that time period, even though if you look back 33 years prior, there was a huge decline in birthing rates, which should have been something that economists and investors were looking at, but they didn't. They just got greedy because everybody could get a loan. And if your credit was decent, you could say you make 500 grand a year, even though you make 50, and you could get financed on multiple properties. And because it's a balloon mortgage, you're only paying interest. And the industry was thinking, oh, you could refinance at any time, so don't worry about it. Well, then the balloons come due, and that meant the whole mortgage was due, and or you had to pay this new huge payment, and most people couldn't afford it. That's why it went belly up. As you can see, if you remember back then I was cleaning out properties for banks, doing property preservation for all those refis. And almost every street you drove down, there's homes for sale. It ain't the way it is right now. We can see it. Back then, there was over 4 million homes available for 11 million less buyers. Right now, there's less than 1 million homes available. And like I said, there's 11 plus million more buyers in the market today than there were in 2007 and 8. And we've underbuilt compared to like home completions versus home formations. Housing formation is people entering the average age to invest in a property. That has been out. And home completions are homes being built and finished, so adding inventory. Housing formations have outpaced completions since 2015 by a drastic measure. And that's why we're sitting in the middle of a housing price increase situation, especially when investors are buying and they don't really typically sell. They buy to hold. So then the inventory is not coming back to the market because typical buy cycle or home cycle for first-time home buyers is 3 to 6 years. So when you can almost pretty much plan on a home coming to market every 3 to 6 years, and that's not happening, mixed with we have some of the most amount of equity we've ever seen in homes in our history, foreclosures are way down. And so we're not seeing the inventory re-hit the market that we're used to. The building permits and the completions aren't keeping up with demand. That's what's causing the home prices to increase and to continue to increase. It's not rocket science, but it is a lot to deal with. And I know it's hard out there. I know the economy is tough, but there's options. That's why you need to talk to a local licensed residential mortgage loan officer who's going to help you invest in property that aligns with your current and long-term financial goals. They're going to ask you, what age do you want to retire at? How much do you need in passive income in order to retire? What are some of these? If they're not asking you these kind of questions, they're order takers. And it's like going to McDonald's. Like, this is one of the largest investments you're going to make. You want somebody that cares, that's going to look at your strategy and make sure you're not going to be set up for failure. That's what I do. And so, like I said, if you have questions, put them in the comments. We had a couple great questions from a few people already. Sorry if I missed yours. If I did, feel free to shoot me an email. The link, if you go to my page, I have my link tree, but you can go to my website, schedule a time to speak with me, shoot me an email, and I'd be happy to answer your questions. I love the fact that somebody was interested in being a loan officer. Anything I can do to assist that person, I will, because we need more loan officers out here. Educating people and helping them get into homes. It's so important. And man, I got some things that'll help avoid a lot of struggles when you first start out. Because my first 5 years in this business, I was on the operations side. And so I was overseeing processing and underwriting and fixing problems post-contract. And now as a loan officer, I get to fix those problems before contract, make sure that people have a smooth, easy, as stress-free as possible closing process. And that is huge because buying or selling a home is in the top 5 most stressful things a person does. They do it maybe 2 to 3 times in their whole life. So it's important. And that's why I love being on here, to add value and educate, because this market's tough. And I have clients who follow me, and I want to make sure that they are appreciated and they hear and they get the most recent updated information, because some of the velocity of money when you own a home and home prices have appreciated the way they are, and yeah, interest rates are a little higher right now. They're in the 6s. But think about what your combined interest rates are on all of your credit cards or other debts. I've been able to help people not refinance because they weren't happy at that home. I was like, well, how about not refinance? How about sell your house, take all that equity, use a portion to pay off every debt you have, use the other part to invest, and then buy another property. Thank you, man. Thanks, Rob. I appreciate you, man. I seen you on here. And your property, I don't know if you've checked, but I bet you it's sitting on some pretty sweet equity, and all just because you bought a couple years ago. And that's where a lot of people are experiencing it. When rates drop a little bit more, like as we go into through the summer months and into next year, I mean, you can go back and look at the data. Like in 2021, home prices appreciated 19% in 1 year. Wait till we see what happens next year and the year after. You think home prices are high now? Wait till next year. Wait till rates come back into the fives. It's going to be insane. So, Rob, thank you so much for that. It was a pleasure working with you and Jennifer, and just love watching people build their net worth, and all because they decided to make a buying decision. But going back to what I was saying, as a loan officer, I'm here to empower people. But that client who was able to sell their house, pay off every debt they have, put another 20 grand in the bank to have their survival account fully funded, so that now everything they make, and they bought another property and put 20,000 down on that house. So they bought a property, paid off every debt, and saved 20 grand in the bank. And now they had about 5 to 6 months of their total monthly debt servicing in an account. So now only once a month, they're making a line item of adjustment to refill their survival account, because all of their pay can go into investing and saving versus servicing debt. And unfortunately, America is a debt servicing economy. And I want to help people get free from that, because when your money can go into investments and savings versus servicing a debt, you're in a total different game. And you can do that by leveraging the equity you have in your property. And sometimes refinancing isn't the key, because when you're doing a cash out, you can only go up to 80% of the value. And there's fees and other stuff that they can be kind of looked at and put back into the loan. And now you've updated your loan to value and your equity, and it can be beneficial for some. But if you're not happy in the property and you're thinking about selling in a couple of years, maybe it's time to reevaluate that. But that's where you have to take a whole picture. What's your strategy? What is your game plan? How long have you been in the home? What is your collective average interest rate on your, revolving debts? And then are you going to get back into revolving debt? And that's what I'm trying to help people avoid, because if you're just going to get back in revolving debt, don't add that to your equity position on your home, because now you're ruining that without changed behavior. And that's the part where I get kind of pissed at certain loan officers if they're not having conversations with people about their spending habits, and they'll pay it off in a refi. Now their rate's higher, their term is reset, and the people end up going and charging their cards back, and now they're worse off than they ever were before. That's not the way people will be successful, or how you build long-term generational wealth. And that's what I want to help people do with my channel. It's something I'm passionate about. I love this. I love the problem-solving aspects of helping somebody get into a home. And there's so many opportunities, especially for like self-employed borrowers. A lot of them feel like, oh, I can't get a home because on my taxes, I claim a certain amount. Great. There's other types of ways to qualify. There's DSCR loans. That's the debt servicing ratio, based on what the property could get. And then so your income's not even really a factor. It's all based on the property. There's also bank statement loans. There's asset depletion. There's so many options. And I'm not the only loan officer that can do it. There's tons of loan officers on here that are great. Cat Loans, she's phenomenal. There's so many great loan officers on this app that you need to go and follow and interview, because this is, again, like I said, in the top 5 most stressful things you do. Maybe you do it 2 or 3 times. You want to make sure you like the loan officer you're working with. And I do help with the debt management. It's what I'm here for. And it's so important because, again, to be successful in long-term strategies, you got to look at some debts and how they are managed. But there's some great loan officers. Like I was saying on this app, Cat Loans is one of my favorite. She's a boss. She knows what she's doing. She's licensed in other states than me. There's a guy named Carlos on this app. Yeah, Rob, call me anytime or text me, dude. I'm here to help, and I can look at things for you, make sure you're set up for success, and give you some updates on your equity position, whatever you need. But yep, I'm here for you, buddy. And also good stuff on your channel, man. I've been checking it out. Hopefully other people will give you a follow. Rob is awesome. I am Lions. He's in the chat. Give him a follow. Fun guy. One of my clients helped close a couple, like, was it 2 years ago? Somewhere in there. But yeah, fantastic. But I'm here to answer questions. I don't usually stay on here very long, just 2020. It's been 4 years. How the heck did it go that fast? You're sitting on ridiculous equity. Homes in 2021 went up 19%. I cannot wait to look at your property and look at where you're sitting for your equity position, because it's going to be silly. I'm excited, bro. But yeah, anybody have any questions, put them in the comments. Otherwise, I'll probably stay on a few more minutes just to kind of go over some things to look out for. The markets, where are we at right now? Make sure you're aware. Only down 11, so we recovered 1 basis point. We're at 101.03. Yay. So this week's going to be interesting. Just got to make sure that we stay in touch. But again, don't try to time the market about an eighth or a quarter, because then it can end up it's like jumping over a dollar to pick up a nickel. Like, you're missing the intent, because you can always refinance later. And most lenders, not just me, have like a buy now, refinance later, and we'll cover your lender costs. So that's why I say buy what you can comfortably afford, because rates will come down, time it, refi. And there's ways to strategically do a refinance where it doesn't hurt you. And especially when you do the timing right and getting rid of mortgage insurance and some other structures that can be done to help reduce your, to make sure it makes sense. Because some people, if they bought when the rates were higher and now they can reduce their rate, but also their equity position, they could get rid of mortgage insurance, lower their interest rate, and maybe go to a 20-year term or a 15-year term and have the same payment, but now their house is paid off 15 years faster. So there's unique strategies, and that's why you want to talk to somebody who has the mindset that you're looking for. Not all loan officers are the same. That's why you want to interview them. Like I was saying earlier, interview the people you're talking to. Talk to a couple and let them know, hey, I'm interviewing you because I'm looking for a relationship. I'm going to ask you some pointed questions and get to know them, because we do business with people we know, like, and trust. You got to be able to talk to your loan officer. Because again, this is in the top 5 most stressful things a person does. Your anxiety is going to be up. And if you're not able to have that kind of conversation with your loan officer, you might feel nervous every time they text or call. You're like, oh gosh, are they thinking this or that? We're here to help calm that down. If we're asking for something, it's because we're trying to make a better picture for the underwriter, but that loan officer needs to do a good job of explaining those things to you in a way that makes you feel comfortable and confident with your decision and not just compliant with the decision. That ain't how I operate. I want you to feel empowered, never like you're just going along with the flow. And so, again, I watch the markets like a hawk. I get updates. I want to make sure you're informed. You don't have to use me. I'm here to educate. I'd love the opportunity to be your loan officer, but let's just start with a conversation. Go to my link, schedule a conversation, a mortgage planning session, phone call, whatever. I use Calendly, helps keep me on track. I'm looking at ADHD. If I didn't have it, who knows where I'd be. So Calendly is amazing. Great CRM that'll help keep you updated. Again, I'll keep you posted on what happens in the bond market, what happens with the different reports. If you want to get copies of the PPI PDF, Producer Price Index, and the CPI PDF, Consumer Price Index, shoot me an email. I'm also working on putting together a VIP list for people who want these types of updates, so I can email you and make sure you stay current. You don't have to be a client of mine. Just keep it posted. Shoot me an email. Hey, Ron, I want to be on your list. Cool. And I'm also working with my marketing team to figure out how to get a survey out so I can send it out to my people so they can sign up to be a part of that newsletter list and stay current with the market. But here to help. Rob, I look forward to talking with you. I'm done. I'll be posting this up to my YouTube eventually. I'm trying to get better about doing it as soon as I'm done the live, but sometimes I get distracted. I have a backlog of ones I have to upload. I'll try to get to that this week. But if you missed earlier, don't worry. I'll have it up eventually on my YouTube channel. Thanks, you all. Have a good one, and I will talk with you soon.